All right, welcome to a special edition of Howard's show. I don't know what he wants to talk about. So,
what do we want to talk about? The S&P's at all-time highs, baby.
we
are. There's a lot to go over since the markets are at all-time highs, and since our market wisdom, these are easy to produce. I wanted to just flip through 10, 15 minutes of the market. So let's start with the S&P, Adam.
All right, I'll share my screen real quick so I can. All right, share, and here we go. So this is the 1-year chart of the S&P 500.
Go to a 3 or 5 year.
Let's do a longer term.
Yeah.
And here we go.
All right. So everybody, yeah, even Vanguard people are happy today, and I think it's important to just kind of figure out, now that we're here. I didn't expect to be here after May, but now that we're here, let's kind of take a pulse of everything. Right now, sentiment's bearish. From all the sentiment polls, Ivan, I don't know what you've seen, but the big sentiment polls, for considering the S&P being at all-time highs, no one can believe it. And for whatever reason, that's bullish. That's bullish.
If it's bearish, that means that people are underinvested or short, which is good.
Well, they're long the wrong stocks. If we pull up FANG, if Google and Apple are 10, 15% below, 20% below all-time highs. Apple today is, writing complaint letters about the tariffs, and rightly so. I mean, they're affected. Google hasn't made a quick enough move out of advertising, and whereas Facebook, so you can see, it's 8% of the NASDAQ, Google, or the NASDAQ 100. So you can see what's holding the mood back. Are the big caps, the big caps. But on the other end, Oracle, I think, hit all-time highs today.
Yeah, absolutely.
So pure non-conglomerate software continues to lead.
Great earnings report. Good guidance.
Anybody owns Oracle. I mean, if you own it, I don't think there's any.
I do.
You own some?
Yeah, I just bought it today.
Okay, you bought it today, but I'm saying there is nobody in Silicon Valley, unless they work for Oracle, is like talking about Oracle. And those are the type of things that are good for a bull market. This is a $200 billion company that never gets talked about in the media. So underneath the surface, and then if we look at Salesforce, even after the big acquisition, I think they've bounced back rather strong. CRM. So they're digesting a big acquisition without really dropping. And I think if you look at the names truly leading, Mongo and Shopify, if you look at Shopify.
Shopify is relentless. It's just incredible.
But what I was going to say about Shopify is no one. Listen, I was telling people, my daughter's 21. She's working for the summer at Raleigh Road. She opened up a Shopify store for the company today. In one day, I think she thought it would be a 1-week project, and was all excited about it. And at the end of the day, she was like, "I can't believe it was that easy." And that is an epiphany, meaning no one's heard of the company. My daughter's tech savvy, supposedly internet native, and in her first internship, she's gotten exposed to a brand that Shopify, as much as I have wanted to sell and have sold along the way up, the company is setting itself up to be the e-commerce 8 to 80 brand, right up there with Amazon. Because there you have a brand now that my daughter understands how to do e-commerce right off her mobile phone or website for any company in the world. So that is probably what's happening around Shopify. It's becoming it's moved from being a niche brand for e-commerce players to be a brand that everybody associates with e-commerce. And the other one is Mongo, MDB, which is a little over my pay grade. I mean, it's an open source database company where pretty much every tech company from StockTwits to Uber to Tinder, Twitter use. And it's quadrupled in the last year. No one's ever heard of it because mainstream America, this is powering the brands, much like Twilio. So I guess the third one would be Twilio. This is that. Probably going to have to come up with an acronym for these companies. But this is a market at which the biggest companies driving the S&P and NASDAQ to all-time highs are companies no one's ever heard of. So I think that may explain the sentiment. So we're caught up there. What's interesting to me going forward, Ivan, is healthcare and biotech. And, I always worry about this, because you and I chat about this, is because I'm just not an expert in this space, and I don't understand how to value companies, and they're not network based, and they require huge investments, and most of them have negative earnings, so and low sales. So how do you value these companies if we're going to go into a new bull market? I got to start learning a bunch of new companies, and so they've been showing up on our list, correct, Ivan?
Yes, some individual biotech stocks. Yes.
So, and we last week started taking a few, and they worked. VYGR, we talked about a momentum money, and it gapped up a few bucks. It's it gapped up a couple bucks the next day. CSI's gapped up 10%, and VCYT. So I'm going to have to create a list tonight of these. Not NVC. Oh, is that NVCR another one of these?
Yeah, which one?
VCYT, I think it was.
Yeah.
I'm going to put a list. Yeah, Verisight, which I own. And, if you go back to a 3-year chart, you can see that companies breaking out out of a long base in 2018 is pretty much tripled, $1.3 billion market cap. So these in a new era are micro caps. So you almost got to have a basket of these. The buzzword of the last 2 weeks is cancer. So Joe Biden came out and said he wants to cure cancer. That's what he's going to run on. He got ridiculed last night. Trump actually said he's going to cure cancer. So this really, who knows with these two idiots what really is happening? But when you have both parties, talking about cancer, that's a good thing, because that's what needs. People, if Americans are going to enjoy their potential wealth and make America great again, they're going to want to live. So one of the bigger companies, San Diego company, I've been in this space that I pull up, ILMN, Illumina. This is like one of the largest genomics companies. And you can see it's been basing for about a year and a half. And I'm super bullish on this company. Asking some people locally about it. I own like a couple of shares that I'm not in my Robinhood account, just to keep an eye on it on my watch list. And I've noticed it acting really well the last month. Just up about 50 points in the last month, moving up the right side of its base. If we stretch that 5 years, Ivan, we can see that this company is for real. It's been a monster since 2010, but at 52 billion, this is where money is going to flow into. This can digest a lot of capital, and this is a leader. If this space continues to get hot, it will break out eventually and continue much higher. So Illumina and the other ones that we just talked about, I'll put them down on paper for everybody. But if you want to build a basket, these seem to be the ones that are leading, and I'll put together a small list of those. In the SaaS space, Ivan, if you could pull up the article from contemporary of ours at Redpoint, Thomas Tungas, who we invest with in the private side at Redpoint. Here's where we are on SaaS companies like Zendesk, Zoom, companies that we talk about every day, Twilio, and you can see the multiples. These aren't times earnings; these are times sales. So we're record highs. This is kind of Thomas puts together great research that I follow. It's a free blog if people want to follow it as well. But I kind of read all his emails. If we scroll down, Ivan, I think what you want to look for are sell-offs here, obviously. You know, it's kind of a winner take all right now with Okta, Zscaler, Zoom, companies we've talked about. Some we've owned, some we haven't. Coupa, Shopify. These are all names that have been mentioned on our shows, or we've owned or written about, and you can see kind of how we think through things, right? What's surprising me is PayPal is down on the lower end, and it makes sense because of the revenue. But the valuation of PayPal is $100 billion, and that may be why the stock just isn't moving like the rest of them. It's already got a massive valuation, but you can just kind of see how we think through some of these names. Then it's been the most expensive names that continue to grind higher. So they've been hard to own. Okta, which I've owned in the past, Viva, which is a healthcare CRM, Shopify, Atlassian, Coupa. So at least we've owned a few of them. But here's, you've got to own the right ones. They've got to be growing very fast on the top line. Otherwise, they will, as soon as they slow down because of the valuations, they really implode. So you have to, tread carefully. And this is kind of stuff we research to keep ahead of this. So that's enterprise. I don't see, I think the dips will get bought. It feels, Ivan, at these levels with the bearishness out there. If we go back to the S&P, no matter what the headlines are saying, things are working in this market. Now, if you're just a S&P investor, you haven't noticed a change in your portfolio the last 18 months. Maybe a 5-6%, drawdown, and we're back at all-time highs there. If you've owned the right stocks, this has been one of the most incredible bull markets of all time. And so that's why I think we do what we do, and that's why I think people should learn to do this stuff, try and add a little edge. The other thing that's interesting, Ivan, in the sense that everything's working, is gold.
Well, that's not surprising with the Fed policy to cut interest rates in an environment when the economy is still growing.
Well, they didn't cut it. They said they meant.
Yeah. But the market expects that, and the market has priced that in already.
Yeah, take a look at a 10-year. So as much as I'd like to make fun of gold, you got a massive base.
It is a massive breakout from, almost breakout.
Yeah, we're not quite there. And you got the dollar weakening. The stage is set for a hard asset rally, Bitcoin's rally. The stage is set for a little rotation into some hard assets, and everybody's plunging into gold. I wouldn't be surprised if it was a fake breakout and if the S&P reversed, and that's why I'm not chasing anything right now. I'm trying to be disciplined here, because I did have to take some losses just a month ago in May, and you don't want to get whipsawed around. You got to ease yourself back into the markets, and I'm at full positions right now. But gold, it seems like every asset class is trying to lure cash off the sidelines, and you have rates hit 10 years hitting, the one handle today.
Yeah, in Europe they're negative. Even in Bulgaria, I think the 3-year bond, it's just negative interest rates, which is just ridiculous. But
there's a classic scenario where the markets could jihad here, and here's why. Google, I look at Google and Facebook, and they can play catch up while the market goes sideways, right? People could just say, you know what, Google, who cares about the government? Google's filled the gap. If we look at Facebook and Google, here's a scenario for a jihad. We can see, Ivan, in June, when Facebook gapped down on the FTC and government, where we're at 178, when the news came that the government's coming after them, and the stock is up 5% now from that date. And if we look at Google, So there's interesting places of no fear. We look at Google, which was really heavy going into the announcement of the government in crackdown in June, gapped down to 1,000 that day, and is now back above firmly for a few days, back above the gaps. And not out of the woods, but what I'm saying here, it wouldn't be crazy for Google to go fill those gaps, another 10% higher from pre-earnings, and Facebook and Apple could easily work their way up to all-time highs, especially on some kind of China news. And so the S&P could rally 5-6% from here in a quiet summer, because those three stocks alone on a 10% move can move the indexes. And then on the Dow, if we look at the Dow, Ivan, DIA, this is price weighted, so I don't really like looking at the Dow. I don't really care about it. But if the Dow broke out, and it did, and it's been sideways for 18 months, correct? Yeah. And so it's price weighted. So if we look at Boeing or Disney, like the big price stocks in this index, the hedges and will come for this stuff, right? As much bad news is out there about Boeing, but Boeing's what will take the Dow higher point wise to play catch up, and it actually, you can see how the markets are working here, and so Boeing runs 20-30 points further, 50 points even, kind of putting in a no man's land, still will move the Dow up a lot. So there's something to be said where some of these stocks that have been running cool down, but like the indexes still kind of suck everybody in and drag that sentiment up. So I wouldn't be surprised for us to just, barring some headline that no one wants to see, and you can't predict this stuff in the political environment that we're in right now. I don't know what stops this market this summer. And, I say that knowing that in May, what's that?
I think 305 is doable if you take if you make a measured move.
That's a big move though.
From 290 to 275, that's 15 points. You add them, that's 305. So
yeah, and it could get there quick. Right. A lot depends on the big cap stock. So I'm trying to position myself to just ride this further. And I don't want to chase new positions, because if you pull up my dashboard, Ivan, I'll share everybody. I shared this link with everybody, but there's my portfolio as it exists right now. I'm kind of tapped. I could add 2 positions, but I have too many. I'm right at the maximum positions that I want to own at 22. People are familiar with these because they're in the portfolio. I've talked about them on Market Wisdom, but you can see here that the only stocks that aren't really at all-time high right now are Tencent, the big ones. Tencent out of China, a laggard, but could quickly play catch up on any good China news, and Amazon, Google, and Facebook. But otherwise, every stock in my portfolio, I guess save Elastic, which is kind of lagged, is at all-time highs. Bitcoin's highs of the year, MasterCard highs of the year, Nike highs of the year, PayPal highs, NASDAQ all-time high today, Disney all-time highs, Shopify all-time highs, PAGS basically all-time highs, right, approaching its all-time IPOs highs, Etsy right at all-time highs. So we're eating McDonald's all-time highs, BCYT all-time highs, CSI all-time highs, Under Armour, which I showed that I was doing a swing trade, hasn't really worked yet, kind of break even, and then Lulu all-time highs, give or take 1%. So I don't want to chase, and I already have so many good positions on. I don't want to have 40 positions, so I'm kind of stuck. Any new position, I got to remove something. And I kind of like the way I'm positioned, Ivan, because I think some of these underperforming large caps can play catch up in a quiet period if the indexes move higher from here. So, I feel I'm positioned really well. And if we do reverse here, I'm just even though I have 22 positions, I'm not deep in any of them. And most of my capital's in the 8 to 80 stocks.
Mm-hmm.
And then what are you looking at?
Well, today, for example, I mean, if we take a short-term perspective, look from a short-term perspective, we saw quite a few profit taking and reversals in momentum stocks. So I don't think people should be chasing. And I'm bullish, but just wait for just a little pullback to a rising, 10-day moving average, 20-day moving average to get it. You don't need to chase. Yep. But there's a lot of strength in the market, and it comes from different sectors. So it's kind of hard to be bearish unless we got another tweet about something stupid. So.
If you're underinvested and you just can't, this is not a time to panic and rush in to buy the stocks that you see here on my list, because I'm not. And there's the 8 to 80 stocks are not stocks you chase in a good market. They're companies that you buy in down markets. And my momentum stocks like Shopify and PayPal and Twilio and the biotech stocks, you have to get the entry rights. And I was buying these. I don't like chasing an extra 10% on breakouts. So we're kind of in a difficult market. If you are underinvested, you have to still be disciplined and pick your spots. And we'll share ideas as we go. One name I actually do have and I got to update is Stitch Fix. I know we're both in this position. This is a trade for me.
Yeah, it's trade for me to already sold half of my position. I hold the other half. It's very highly shorted, very high short interest.
Yeah, I love the short interest. I love the seasonality coming in our favor. And it's
another company in the same industry. It's a recent IPO. RBL, they've done amazing too since their IPO.
I don't know what did they do. Sorry, I'm not sure.
I think it's similar to Stitch Fix, right? Like they offer people subscriptions
for clothing.
But I'm not sure. I need to research that further. But
yeah, so if we pull back Stitch Fix, I was looking at this from.
I know that the stock has been really hot.
And what have you seen that's different? I've noticed that your trades are working right now. You haven't done anything differently. The market's just working better for you.
For swing trading, yes. I mean, I have two different accounts. I have a swing trading account, and then I also have an intraday account. So during volatile markets, during market corrections, I mostly day trade. But during rising markets, you can make a lot more money swing trading.
I noticed a lot of your entries just working. That's just the market itself.
Yeah. In the past 3 weeks, have been very favorable for swing trades, and those moments.
Sizing now that the market's improved a little, or no?
Can you repeat that? I didn't hear it.
You upped your sizing. I know you had been reducing sizing. Have you been upping your sizing because the trades?
Well, my usual sizing is between 1% and 2%. But then if it's a biotech, it could be 0.5%, and we're talking about risk, 1% risk, not about overall position size. So
for me, it's different. My positions, my 8 to 8, my bigger positions are, anywhere between 1% and 5%. And my swing trades are,
back to normal sizing. But as I said, sizing depends also on the individual volatility. If I deal with the recent IPO, it will probably be 0.5% just because of the crazy volatility.
Yeah. I'm right now, my swing trades, especially in biotechs, are 1% risk. So very small.
That's pretty good.
Yeah, so those can get. I won't go above 1%. So in my swing trades right now. So I even though I own a lot of positions, I'm pretty light.
Slack, they went public with a direct offering today, right?
I think the news of this is it closed below 40. Okay. I don't know how high it got, but I think what's interesting about Slack is the great companies in the next 20 years are going to go around banks. I think what we've seen here, if we looked at a few of the good ones other than Uber, like the really good deals.
Spotify, I think they also went wrong.
Yeah, so that reversed again today.
I would say in a bad market, they need the banks. But in
the bad market, they need the banks, but
they don't need them.
we just need them less than that. I think the guys at Koifman put up a chart at Goldman Sachs. Their sales have not increased, and their net income hasn't gone up in 12 years. And the stocks, you know, if you look at a 10-year chart, it's right where it was 10 years ago. You know, so this is through a boom, right? We've had a massive boom since 2009, and the stock is still kind of below 2008 highs. And this is supposedly the best, investment bank in the world. So it's going to be a tough environment. Now, Jpmorgan has much more leverage on their balance sheet, but so maybe not is you can't tie them to a Goldman. They've done better than a Goldman, so it's definitely had a great run since 2009, but they're in a kind of a league on their own, and the rest of the banks, it looks like trouble for them, especially if especially if the Democrats get back in power. There'll just be nothing left of these guys. So, now, if I'm wrong and these go and the banks play catch up, the indexes are going to go on a tear. But I think what we've seen since 2008 is everybody used to say, oh, without the banks rallying, the markets are going to have trouble. The S&P is up 500% since March 2009. And you can see that, Bank of America is still below its 2008 highs, and still levered to the max. So they've had the perfect environment to make a comeback. And so who knows if that can continue. I think what everybody needs to know is rates are low. We've got a Fed that seems to be on the same page with the president. They just want the markets higher. I don't know if that's long-term good or bad. And we have kind of bearish sentiment. People just aren't in the market. And you have this 18 months of S&P going sideways. So people aren't just excited to throw money in the market. They haven't seen the returns of being exposed to software. Software is still such a small niche. Tech is a huge part of the S&P, but software itself is a very small niche. So very few people have all software exposure. Like basically what we have in my portfolio is 90% software exposure. Diversified within software, but America is way under diversified to software. I forget, you can break down the S&P 500 on Koifman and see what's working, but it's really information tech is driving all the returns.
Let's see.
On Koifman, if you go to the Twitter Koifman, they have a link to it, Ivan.
Twitter Koifman. Okay.
We'll end with this, but I want to show people. It really is interesting.
And then we have Koifman. The Koifman charts.
Yeah.
And
keep going. Scroll down. Scroll down. Right. That's the Goldman piece that was interesting. Scroll down a little bit more. Oh, sorry, Ivan. Scroll up. Go to the Goldman one. No. Sorry. The cool bar chart of, my bad, buddy. Yeah, right there. Snapshot. Koifman snapshot. So if we click on this, we can see what's contributing to the S&P. So HDS is holdings. Okay, so if you type in SPY holdings, you can see this at any time, and it's loading up here. This is a really great feature.
Mm-hmm.
You can see the S&P is up 8.5% year to date. That doesn't. Oh, no, that's 1 year returns year to date. I don't see. But Ivan, if you scroll down a little bit, so Microsoft's had a huge. So and they are a software company. Can you scroll down, Ivan?
Yeah, I'm trying.
Well, that's weird. I bet you can see software in the industry breakdown. you can see that software and IT services are like the whole.
Yeah. Information technology, 14.6.
Yeah, it's not hardware. It's not technology.
Yeah, we have
right? It's consumer discretionary.
energy negative.
Yeah. But I'm saying if you really think about it, you know, if you own the S&P, you own all of this. But to me, if it was software eating the world, and that unfortunately is catching on, you know, quite handily right now, as smart people are starting to look at this and go, get me software. They're not saying get me access to the S&P. They're saying get me software. And that's why we're seeing these software stocks not have any dips. And that's why you see Microsoft outperforming all the other FANG stocks, is they are software based, you know, from Azure to Office to, you know, they have the Xbox, but it's really selling software, and Microsoft Office and, you know, Teams. So hopefully that helps people. And Ivan, have a good night. We'll talk soon. I'll put this up for everybody.
All right.